Can see my screen, right? Can you see my screen?
Yes.
Okay, okay. So good evening, everyone. Welcome to class this evening. My name is Christiana. Typically, you should have seen my face in class. Okay. So in this evening's class, I'm going to be taking you audit reports. I previously sent out a list of topics that up until this point have been said to have been completed, and I felt like it was good for us to get the feedback on the classes that you attended, because I know that a lot of people were not around for some classes, and that may be a problem. But it's only 4 people that voted, and I didn't get any kickback from anybody that, oh, they didn't attend the class and then basically explaining. I'm saying all of this to say that audit reports is more like the continuation topic, you understand? We're referencing different parts of the audits, that topics that you should have gone through, things like audit planning, you understand, things like the approach that was used to carry out an audit and things like that. So that was why I really wanted to know the states that you were, or the number of classes that you attended, just so that I would know if I need to do a recap or something like that. But I'll just judge by the 4 feedbacks that I got, that we can proceed. Can we proceed?
Well, hello, this is my first class though. I came physically last week, but there wasn't the person that was supposed to come couldn't make it. So I just put on the chat too, if you could please share the previous materials, because all I have now is what you just shared today. Thank you.
Okay. So that's not a problem. I can forward all the previous ones to the group after this call. Okay. Thank you for that feedback. Then so apart from her, CG, Angela, Helena, what is your standpoint?
Okay, so I would also appreciate the material that you'd forward to the group as well, so I can catch up.
Okay.
Yeah.
Okay. So so everybody's saying that we can proceed, right? You try and balance up. Right? I just need a consensus yes. That's what I'm asking. So should we continue? Please unmute and speak. Oh.
Yes, it's okay by me. Any other person can comment.
Okay, so I've gotten one more yes. Okay, so let's move. We'll figure it out. Now, the end results of all the work that we do, right, in audits is such that we are able to give our clients an audit report. That audit report is such that we're able to give our clients a report. Now, that report is what the client can understand. You know, when we are doing all our own work behind the scenes, all those plenty checks, all those plenty communications with external people, just so that we can prove the validity of the figures that are in that FS, it doesn't really concern the client. The client just wants a report on our opinion on their FS in general. Okay? And that is what is the priority to that client. So we're basically going to look at what an audit report is, the types of audit reports that we have, the reasons why we have different types of audit reports. Okay? So that's what we'll be doing in this class. I personally, when I'm taking an online class, I like it when the students read, usually at intervals. So I would call you and you have to read. If you're in a noisy place, you can just tell me. If you are not, you can I encourage you to read, just so that I'm not just speaking over your head and you are a part of the class. Okay? So I'll take the first reading. Or the audit report. The auditor's report on the financial statement is the only direct communication between the auditor and the owners of the company, to whom the auditor normally reports. So they are saying that the only time auditors' work has a direct impact is when they put it in a report form and they are giving it to the people that have put even the managers in their position. who are the shareholders. Okay. Now, we said in the past, the auditor's report was criticized for being too brief to allow the general reader to understand the nature of an audit and the meaning of an auditor and the meaning of the audit report. This was seen to be a major cause of the expectation gap. What's expectation gap? Expectation gap is the difference between what people think the work of an auditor is and what his work actually is. Okay? That's an expectation gap. The difference between what people think or public perception on the responsibility of an external auditor and what his job actually is. Now, they said the expectation of the public are often set at a higher level than that at which the auditor actually operates. For example, the public believes, number one, the public believes that the audit opinion amounts, the public opinion amounts to a certificate that the financial statements are correct and all financial decisions, are correct for all financial decision purposes, including a takeover. Number two, that the auditor has prevented and detected fraud. Number three, that the auditor tests 100% of transaction. The implication of this tends for a legal action against the auditor. So these are examples of expectation gap. They're telling that, first of all, people would come and they will believe that the audit opinion is a certificate. You know how they used to hang certificate of trading in their this, they want to hang it there and say, oh, Deloitte said our FS is correct, though. So we can use it for everything. We can use it for takeover. We can use it to apply for loan. We can, anywhere they're asking us for FS, simply because the lawyers are the ones that audited it, it is good to go. And that's wrong. When you want to do a takeover, you need to do due diligence, Abi, on that company. And it is separate from a regular audit. Okay? Next thing, they believe that auditors are supposed to be doing prevention and detection of fraud. But you know that is a secondary objective of audits. It is not a primary objective. No auditor goes to an audit with the intention that he wants to go and be checking for fraud and error. No. If in the process of carrying out his work, he now sees fraud and error, there's no problem. He would always make it known. Okay. The third one we have is that the auditor tests 100% of transactions. The implication of this is that people will do legal actions against him. Now, what are we trying to say? The auditor, in this case, cannot test 100% of transactions. You'd have done like I think we'll do audit evidence next week Sunday, hopefully, and upper Sunday. To be 2 classes. And one thing you need to know about it is that no company that is like a multinational, right, is going to put that much effort. Not that much effort. It's impossible to carry out an audit where you're checking 100% of transaction. In Zenny Bank, they may have like 5 billion transactions in the year. Is it that one auditor that will not be checking all of that transaction? Definitely, it's going to be impossible for him to check all transactions. Okay. Now, what are now the response to all these expectations gap? The first one is that corporate governance code have been charged to strengthen the role of directors for sound internal control system. So they're basically trying to tell you that any FS that you get first starts from the one you create. It is the one you create that the auditors come and work on. The number 2 is that the auditor's report is addressed to the owners of the company, not to the user of the financial statement. So they're trying to tell you that another thing that we need to realize is that our audit report is for shareholders. It's for shareholders' use, not for a random person that picks it up and wants to use it. Number 3, we have some countries, such as the UK, allow the auditor to include an additional paragraph to the audit report after the opinion paragraph, disclaiming any liability that may arise from the use of the reports by persons other than those to whom it is addressed. However, this is not currently the case in Nigeria. So, in your case study, you guys are doing case study. You have done case study, Abi? Or you are doing case study? Do I still have a class? Hello?
Yeah.
Okay. You have done case study or you are doing case study. You know that disclaimer that you write on the front page, Abi? That this report is for XYZ Limited, Abi? And it's only for their use. Will not be liable for any other person that relies on this report and suffers a loss. You see that disclaimer? They are like, they want to start putting in audit reports as well. Okay. Moving on. We want to talk about what exactly is true and fair. We always say the work of the auditor is to ensure that the FS of a client, Abi, is true and fair. What exactly is true and fair? So I'll first start from Eliana, right? It was me and her that were in class first, so she will read first.
Yeah.
Okay?
Okay, so an audit report, right? Okay, I should read the screen.
Yes.
Okay. So the meaning of a true and fair view. The meaning of a term, a true and fair view, has not been rigorously defined either by law or by auditing profession. Many legal authorities and writers on auditing have developed their own definitions of the term. The main points to note are as follows. The assessment relies heavily on the judgment of the auditor. It is appropriate to think of true and fair as a combined phrase. Do not try to define true and fair as a separate concept. True and fair will normally imply compliance with any relevant legislation and accounting standards, the use of accurate figures or best possible estimates,
Very
meaningful presentation and disclosure of information, the avoidance of bias, distortion, and manipulation of figures, no concealment of material information.
okay. Just wanted to underline that. Okay. Yes, thank you very much. Now they've said we'll talk about true and fair, saying that an FS is supposed to be true and fair, true and fair, true and fair. What exactly is the concept of being true and fair? Now they said number one, true and fair is heavily reliant on the judgment of an auditor. And that's why this our work is still under social science. You understand? It's still under social science, it's still under management science, because there's still a fragment of our personal judgment that comes into how we do work as auditors. Okay? Now, the next thing we said is that it is a combined phrase. True actually means they'll say true means that it is without any material misstatements, and fair means that every element of bias has been taken out. Okay? But you look at them together. Now, but when they now say we're talking about true and fair together, but do you mean that all regulations will have been complied with? The figures in that FS is accurate. It has meaningful presentation. There's avoidance of bias, and there's no concealment of material information. Not that the company has bought one asset that they did not see money to pay for, and that information is not on that FS. Okay? Everything that relies to true and fair has been properly imputed. Okay? Now let's move on. Then I moved on to an audit report. Okay. Please give me a minute. I want to show you guys a diagram. That diagram here, if we understand it, we'll spend less time in this class. Okay? Just give me a minute. Okay? So now, we want to look at our audit reports, right? Want to look at our audit reports. The one we know, right? The one that we always see in a lot of companies is that 3-page document, okay? That they write, in my opinion, we have not seen, you understand? That one is called an unmodified audit report. So just imagine a table in your head and write audit reports. Abi, on the left-hand side now, put unmodified reports. Okay? I'll try and draw it out and maybe snap it to your group. So we have unmodified reports. So another person can read for us apart from Eliana. Another person can read for Eliana. You can continue reading if it's okay.
Okay. The
Yeah.
unmodified audit report IASS 700.
Yes.
Unmodified opinion is the opinion where auditor expresses an opinion that financial statements are presented in all material respects in accordance with applicable financial reporting framework. An unmodified opinion provides a high level of assurance that a professional independent examination of the financial statement has not revealed any actual or possible material misstatement in those financial statements. The general format of the report is regulated by the revised ISA 700, forming an opinion and reporting on financial statements. However, the precise wording of an audit report may be varied at the discretion of the auditor.
Okay, thank you. Okay, so now what we're trying to say is that in an unmodified opinion, the opinion of the auditor is that the FS has been presented the right way. The right way that the FS should be presented is how it should be presented. And it basically gives what kind of assurance? A high level of assurance, Abi, that a high level of assurance that the FS does not contain any material misstatements. Now, one thing you should know is that these are our audit reports, right? It has what they used to call a standard wording. Standard wording, like STANDAR, then wording. It means that it is not you that is thinking about what is in that audit report. If you are doing an unmodified report, there's already a standard template for an unmodified report, and you copy it and paste it. You understand? If you are doing a modified report, so there's a standard template for it. Now that they said, however, the precise wording of an audit may vary at the discretion of what an auditor, but there is a standard template for what an audit report. Okay, now let's move on. Unlike the original ISA 700, the revised ISA 700 does not deal with the modifications to the audit report. Modified reports are subjected to ISA 705, which is the modification of audit reports, and 706, emphasis of matter paragraph. Okay, just hold this one in one hand. Okay, hold this one in one hand. Now let's move on. Reaching the auditor's opinion. In reaching an audit opinion, the auditor is required to evaluate whether, number one, he has obtained sufficient and appropriate audit evidence as to whether the FS is free from material misstatements. Number two, he has corrected misstatements that are material, either individually or aggregated. The financial statement gives a true and fair view. The financial statement has been prepared in accordance with the relevant financial reporting framework. The financial statements are adequately disclose significant accounting policy. The accounting policies are properly and appropriately and consistently applied. Accounting estimates are reasonable. The information in the FS is reliable, is relevant, is comparable, and is understandable. Then that the FS provides basic, adequate disclosure. So long and short, before you will give an unmodified report, Abi, it means that financial statement must be true and fair, and it must have met up with all these criteria. Oh, sorry.
Sorry, I have a question.
Yes.
Does it mean that unmodified report is the opposite of a qualified report?
Now, I don't want to confuse you. You know, I'm trying to draw a diagram for you. Audit reports, okay? That audit report now, on the left-hand side, there's modified. Abi, on the right-hand side, what will definitely be there? On the left-hand side, there's unmodified. Abi, so on the right-hand side, what will be there? Modified. Okay? Now, when we now go forward, there is something inside that report that either makes it a modified a unmodified report with a modified opinion, or a modified report simply because the opinion paragraph inside has been modified. So let me not confuse you, okay? Just calm down. Now, I told you that are you with me, Eliana? Or who was
Yes, I'm
asking? Are
with
you
you.
with me? Yes. So
Yes,
now,
I'm
I
listening.
told you that your audit report has a standard wording, right? Your audit report has a standard wording. So that takes us to our next subheading, which is the basic elements of an audit report. That means they are saying that all audit reports that are unmodified in the sense that nothing has been changed on that report. The same way ISA 700 said we should do an audit report, if the financial statement is true and fair, we can pick it and paste it. You understand? That is what we are saying. That's the reason why it is called unmodified, right? Some people even call it a clean report. You understand? That's the reason why it is a clean report. That's why it's an unmodified report, because you can pick the standard and not modify it and use it for your client. Unmodified. Do you get? Eliana?
Yes, I do. Yes, I do.
Okay, now, basic elements of an unmodified audit report. An unmodified audit report will have a title, it will have an addressee, that means the client you are writing it to, Abi. It will have an introductory paragraph. It will now have a paragraph that states that management are the ones that are responsible for preparing the FS, okay? The fifth paragraph will now say, auditors are responsible for reviewing the FS and giving an opinion on it. Then you see this sixth paragraph, we call it the opinion paragraph, okay? The opinion paragraph. It is inside that opinion paragraph that the auditor will say, in our opinion, this financial statement gives a true and fair view, okay? Are you with me? It is called the opinion paragraph. Now, the seventh one is now all the other reporting responsibilities. This paragraph is added when other tasks has been given to the auditor apart from audits. Okay? Apart from what? Audits. Next up, we now have the auditor's signature, the date of the audit report, and the auditor's address. So there are 10 basic elements of an unmodified audit report that we can pick from ISA 700 and paste it for a client if that client's FS is true and fair. Everybody together?
Yes.
Okay. Now let's move on. Unaudited supplementary information presented with the audited financial statements. The report and accounts issued by a company often contains supplementary information that are not covered in the audit opinion, such as the chairman's statements. Let me even ask you, what are the contents of a financial statement? Somebody in this class should help us list it. Statements of financial position, Abi. Income statement, income statement and other comprehensive income, Abi. Statement of
cash flow.
Statements of cash flow. And what's the last one? Notes to the financial statement. Thank you. So they are saying that sometimes there can be some other supplementary information that are not going to be presented in the financial statement, such as the chairman's report, employment report, or business review. The auditor should satisfy that any unaudited supplementary information that is presented together with the audited financial statements is clearly differentiated from the audited financial statements. If the auditor concludes that the unaudited information is not clearly differentiated, he should ask management to change how the information is being presented. If management refuses to do so, the auditor should explain that in his report that the supplementary information has not been audited. Now, this is because you want to make sure that in your chairman's reports, Abi, in a bid to have more investors, you understand? He does not say something that is inconsistent with the elements of the financial statement that you have audited. Okay? So, how can you even avoid this? You can avoid this simply in your responsibility paragraph, Abi, where the auditor states that this is what me I audited, though. Any other thing you see in this report, I don't know where it came from. Me, I shall audited these 5 things. Okay? So, I feel like that can be sorted out, that case. Now, We talked about audit reporting and karma. I don't think I want to concern myself with this. Okay. Now let's move on to, okay. So here they talk about an audit committee. Audit committee. What is an audit committee? They said section 402 of karma, in addition to an audit report, said that all public companies must report to what? A audit committee. The form and the nature of the report remains somewhat discretionary, as karma 2022 does not prescribe the content and scope of an audit report. The form and the contents must be written down in an engagement letter. Okay. But now let's look at the objective and the function of an audit committee. That can be an exam question. So an audit committee is made up of 5 members. If it is here. Okay. So an audit committee is made up of 5 members, in case you're writing down. 5 members, 3 non-executive directors and 2 executive directors. Before now, it was made up of 6 people, 3 non-executive directors and 3 shareholders. Those people have a direct responsibility of liaising with the auditor. You know, people believe that the auditor and the management, they used to have too much interaction. And if you are saying that management and auditor are not friends, how can they be interacting with the auditor so much? So in a bit to balance that, they now said the auditor should be liaising with the what? With the audit committee that had shareholders and non-executive directors. Well, in recent time, that has also been changed to 5 members, 3 non-executive directors and 2 executive directors. Okay. So what is the objective and function of an audit committee? They are going to ascertain whether the accounting policies are in accordance with legal regulations and if they are ethical. Number 2, they review the scope and planning of an audit exercise. You understand? Number 3, they will review findings of management in conjunction with the findings of the external auditor. Just basically, like I said, they are like a bridge between the two of them. Then number 4, they keep under review the effectiveness of the company's system of accounting and internal control. Then number 5, they make recommendation to the board. Notice the audit committee does not make decision on behalf of the board. Based on their interaction with the auditor, they can make recommendation to the board on the removal or remuneration of an external auditor. They don't have the power. Who appoints the auditors? Shareholders in an annual general meeting. But because your audit committee consists of your non-executive directors and your executive directors, they can go back to the board and make a recommendation to the what? To the board. The 6th one is that they authorize the internal control auditor to carry out investigation into any activities of the company which may be of interest to the what? To the committee. Okay? Everybody with me? Do I have a class?
Yes.
Yes.
So now, let's now move on to our modified reports. Like I said, the reason why a report is unmodified is simply because you can take it from the standard and use it directly without having to think about it. Okay? Now, let's now move on to a modified report. Why is the report even called modified? Apart from this big English, it is because for one reason or the other, you have had to change something in that audit report that makes that audit report not the exact way it was written in the standard. Okay? Now, before issuing a modified report, the auditor discussed with management for the reason of the modification. The reason should be explained, and the auditor should ask the client's management to amend the financial statements. If management makes the necessary adjustments, the auditor will not need to issue a modified report. And this is actually the reason why management care about auditors small. If not because of this opinion paragraph, Abi, they will not send auditor. Some people are very rude. So that's the reason why when you call for corrections, I don't understand, they are willing to answer because they don't want you to modify their audit reports. Okay. Now, then I say, if management refuse to make an amendment, a modified report may be the only course of action available to an auditor. And audit reports may be modified where, number one, matters arising that does not affect the opinion of an auditor. Sheget. So now, the report will be modified, but the opinion will be what? Will be unmodified. Do you understand? I'm trying to write down as well so that I can send you a table. Matters not affecting opinion. That's the first one. Then the second one is what? Matters affecting opinion. Okay? Then matters affecting opinion. Okay? Matters affecting opinion. Don't forget, which opinion are we talking about? This opinion paragraph. Okay? This opinion paragraph. Paragraph 6. Are you with me? Now, let's now look at what are the matters that does not affect the opinion paragraph, and what are the matters that affect the opinion paragraph. Now, matters which does not affect the opinion paragraph are either called emphasis of matter paragraph, right? It's called emphasis of matter paragraph or other matter paragraph. Okay? Emphasis of matter, other matter. Now, this is where the auditor has to modify the audit reports by adding an additional paragraph. Okay? But the opinion paragraph in that report will still be that, in our opinion, this financial statement contains a true and fair view. Do you understand? The opinion will still be that it contains a true and fair view. Just that there will be an added paragraph called the emphasis of matter paragraph, or there will be an added paragraph called the other matters paragraph. Are you with me? Now, there are now matters that affect the auditor's opinion. Okay? There are now matters that affect the what? Auditor's opinion. They said this will give rise to a qualified opinion, a disclaimer of opinion, or a word, or an adverse opinion. Now, this one is telling you that what will happen is the audit reports will be modified simply because the opinion paragraph inside that report has to be modified. Okay? So that opinion paragraph can either have a qualified opinion, or it will have a disclaimer, or it will have an adverse opinion. Are you with me? So now, they've now told you that a modified audit report can therefore have, a modified audit report can therefore either have a unmodified audit opinion or a modified audit opinion. Who understands these statements? Because I'm trying to really break this audit report down because people are usually confused. Do you understand what he said? Do you understand this? Can somebody explain this to me, this statement? When they said a modified audit report can either have a unmodified audit opinion, that is the opinion paragraph, or they will have a modified audit opinion. I want somebody to tell me that they understand.
I do. I think I do to a fair extent. I think I understand.
Okay. So when they say the report will be modified, but the opinion will not be modified, what does it mean?
From what you explained, you mentioned that a modified audit report is just simply that it's a report that is not in the usual standard. That is, you can't take it from the standard. the way it is in the standard, and that is because it can be two reasons. There are matters arising that do not affect the opinion, which will lead to an extra paragraph that makes it modified, that makes the audit
Eh,
report modified. It can
Yes,
be matters that do affect the audit opinion. So that is the opinion paragraph is going to be modified. So, and the opinions that can be modified, that is the qualified opinion, a disclaimer of opinion, or an adverse opinion. So a modified audit report is basically is a report that doesn't follow the prescribed format, or rather the same format, just because there are matters that arise that will affect the opinion or may not affect the opinion.
exactly. And you know that the reason why we now call a report unmodified report is that we are also saying that the audit opinion inside that unmodified report is also unmodified too. Do you understand?
Yes.
Exactly. Now, if you understand, I'm going to snap this diagram now and send it to the group. If you understand this, there's nothing in audit report again, because that is all we are trying to explain. Okay, so we want to start reading what the different types of what paragraphs. Now, the first one, emphasis of matter paragraph. An audit report may be modified to include an emphasis of matter paragraph or other matter paragraph. The purpose of this paragraph is to provide additional communication in the audit reports where the auditor wishes to draw the emphasis of users to a particular matter. They do not modify the audit opinion. Do you understand? They do not modify the audit opinion. Okay? Now, what's an emphasis of matter paragraph used for? An emphasis of matter paragraph is used to draw the attention to the user over an item that is included in the financial statements. Okay? That is included in the what? Financial statements. Then the other matter paragraph is used to inform the user of an information that is not included in the financial statements, but that they consider relevant. Are you with me? Can you see the difference between the two of them? Can you see the difference between the two of them? Emphasis of matter paragraph, the matter is in the FS. Let's say, for example, they are saying, we are calling your attention to a particular debt that we're carrying under our receivables. You understand? We have been carrying under our receivables. Now, we have changed that thing to a bad debt. And the chances of it being irredeemable is very high. You understand? And the effect on the company is very high. We are going to add it to an emphasis of matter paragraph, because bad debts, trade receivable are line items on the FS. Okay? Why other matter paragraph can be something like, we have a pending court case. The matter is still in court. There are even examples. Let's read it. Circumstances that give rise to emphasis of matter paragraph may necessarily give rise to ISA 706. Giving the following example. Number one, where there is uncertainty relating to future outcome of an exceptional litigation. They don't know. Yes, they would have made an amount in the FS called contingent liability, what they are estimating that they will pay. But if that is a matter that they don't know the outcome, it has to be in the emphasis of matter paragraph. Number two, where the entity has adopted a new IFRS early and it has had a pervasive effect on the FS. By the time they switch to that standard, maybe the value of the assets greatly reduced or things like that, they have to put it in the emphasis of matter paragraph. Yes, it is an IFRS item, so it's already on the face of the FS, but you need to call the attention of the users to it. The third one is to draw attention to a major catastrophe that has had or continue to have a significant effect on the company. So they must put it in the what? In the emphasis of matter paragraph. ISAs requiring an emphasis of matter paragraph. There are currently 2 ISAs that require emphasis of matter paragraph. Number 1 is subsequent events. Okay, so if there's a subsequent event, it must be in emphasis of matter paragraph. If there's a going concern problem, that's how you treat going concern problem. You must add it to the emphasis of matter paragraph. Now, let's say example. Why is this paragraph? In this paragraph, they'll say, without qualifying our opinion, we draw the attention to note 5 on the FS. Can you see? In emphasis of matter paragraph, you can link what you are saying to a direct line item on the FS. Without qualifying our opinion, we draw the attention to notes to the financial assessment, which indicates that the company incurred the loss of this during this year. As at that day, the company's current liabilities exceeded its assets by this. This condition, along other matters in notes this, indicate the existence of a material uncertainty, which may cast a reasonable doubt, or maybe it's going concern or something like that. But you can see how they are referencing, and they are referencing things on the direct line item. Okay? Now, that's for emphasis of matter paragraph. Just know that emphasis of matter paragraph, we are referencing a matter that is on the face of the FS. Do I still have a class?
Yes.
Hello?
Yeah.
I still have a class, right? Now, let's look at other matter paragraph. Other matter paragraph. Now, for other matter paragraph, ISA 706 gives the following examples or circumstances of an other matter paragraph. Where the auditor is unable to resign from the engagement, even though the possible effect of a limitation in scope imposed by management is pervasive. This should be a rare practice. Now, this one is that, let's say, for example, these people are not even giving you what to work with, but you know that you want to call the attention of users to something. But management are not even giving you what to work with, and you don't want to do limitation in scope. Limitation in scope is basically where we have like a disclaimer of opinion. But let's move on. So you don't want to tell them that I did not get enough information to do my audits, Abi. So you just put matter in other matter. That's why this should be a rare practice. On number 2, where local law or custom allow the auditor to elaborate on this matter on his reports. Let's say, for example, we are seeing that this company is heavily trading crypto in a country that crypto is not accepted. You understand? But at the same time, it is not an offense. You know how Nigeria crypto is. We don't know whether they are accepting it. We don't know whether you understand. So let's say, and you know that crypto is a very volatile way to make business profits, you get. And the auditor is like, I need to draw the attention to users that this is what you people do to make your money. Let them be fully aware, you understand, that this is the kind of business activity that you are involved in. So he can put that in his what? In his other matter paragraph. Third one, we have, if revision of other information issued by the audited financial statements, e.g. the director's report, is considered necessary by the auditor, but the management refuses to make the revision. Like now, director report, he has written that we believe that in the next 6 months, we'll totally hit a profit of 655 million. And the auditor is saying that you cannot hit it. It's not this ratio and trend that I did so, right? But because the director's report is not his responsibility, he does not have domain there. Where does he have domain? He can add another matter paragraph that states that following their review, this company may not be able to hit XY. They may not be able to go over 30% extra of their income than from what they've made, you understand, this year. So that is what an other matter paragraph. So just know it this way. Emphasis of matter paragraph, you are referencing something on the FS, okay? Other matter paragraph, you are referencing something that is not that is not directly on the face value of the FS. Do I still have a class? So that way, the audit report is modified, but the opinion paragraph inside that audit report remains what? Unmodified. Just that the basic elements of the audit report is now modified to accommodate an additional paragraph called the emphasis of matter paragraph or the other matter paragraph. Are you with me? Do I still have a class? Hello, do I still have a class?
Yes, I understand to a fair extent. I don't know about
There are some people that don't say anything because I want to be that they are understanding me. Okay. Now let's move on. They now said, okay, at what point do we even now change it for everybody and say, well, even our opinion inside this audit report say we're going to modify it? Okay, let's read. ISA 507 talks about the modification of the opinion in the auditor's report. Okay, it requires the auditor to modify audit opinion in the audit report in two situations. Number one, there is a material misstatement, and number two, there is a limitation in scope. Okay, there is a material misstatement, and number two, there is a limitation in scope. Okay, now what does it mean for there to be a material misstatement? This occurs where the auditor concludes that based on the audit evidence obtained, the financial statement as a whole is not free from material misstatements, right? You have looked at it and you realize that error one ikini, and the error that is here is not small error, abi, it is material. Number two, limitation on scope. This occurs when the auditor is unable to obtain sufficient and appropriate audit evidence to conclude that the financial statement as a whole is free from material misstatement. This one now, just when you think about limitation in scope, just think about it that you don't even have enough information. You don't even have enough information to use to know whether they are lying to you or not. A classic example that you can put in your mind: you go and audit a client and they tell you that the first quarter, all the efforts that we use in the first quarter, our software wiped away. So we don't have any information, but we know what our profit is. We know what our, do you understand? And they're telling you that you should come and give audit reports. You understand? Can you give enough audit reports when you cannot find the first 3 months transaction? You understand? Do you get me? There is definitely a limitation on scope. Okay? Now, they now said ISA 705 lists 3 types of opinions that will now arise. It can either be a qualified opinion, so modified report, qualified opinion, modified report, adverse opinion, modified report, disclaimer of opinion. Okay?
Please, can you take that part again? Sorry.
Okay, so I said it will be a modified report, and the opinion paragraph inside will be a qualified opinion. It will be a modified report, and the opinion
Please, can
paragraph.
you take that part? Hello?
Yes, I'm taking it again.
Okay. Sorry.
So which one am I taking again?
No, the part where you were saying qualified opinion and something else, adverse opinion, and I wasn't getting.
Okay, so I said based on these 2 matters, based on either a misstatement or limitation in scope, there are now 3 opinions that can happen. Okay, so it is these 2 matters that are leading to the opinion. Are you with me? It is these 2 matters that are leading to the opinion. Okay, so you can now either have a modified report. You know, the report is already modified now. Why is the report modified? Because we're not using standard wording. Okay, so it will now be a modified report, and the opinion paragraph inside it will be a qualified opinion. Okay, it will now be a modified report, and the opinion paragraph inside it will be an adverse opinion, or it can be a modified report, and the opinion paragraph inside it will be a disclaimer of what? Of opinion. Are you with me? Do I still have a class?
Yes, I'm with you.
Okay. Now, let me explain this diagram for you. Just in case you have not been listening up until now, I beg you, listen. The following table from ISA 705 provides a useful summary for each type of modified opinion. Now, matters, nature of matter, abi, we said it can either be what? Material misstatements, abi, or disagreements with management. Sorry, material misstatements or limitation in scope, abi. Now, that material misstatements can be seen as a disagreement with management. You are telling them that these particular FS, these figures that you put in, it can't be what gave you this. Okay? Now, one thing that you should know is that these two matters, when we are ranking it, it can either be material but not pervasive, or material and pervasive. When is something material? An item is material when its omission or misstatement, Abi, can affect the opinion of its user. Now, for something to get to an audit report, it means that it is material. Do you agree? Do you agree? For something to get to an audit report extent, Abi, it is material. I need response. Do you agree?
Yes. Yes.
Yeah.
Now, what does it mean for something to be pervasive? For something to be pervasive, it means that it has the tendency of rendering that financial statement useless. It has the tendency of rendering that financial statement useless. Pervasive means found everywhere or spread everywhere. A pervasive misstatement could be so serious. Abi, I'm trying to underline this. Are you with me? It could be so serious that it could render the whole financial statement useless. Okay? It could render the whole financial statement useless. That's a matter will be material but not pervasive. If the auditor encounters a material problem with one or more specific items, but the remaining items in the FS are whole and they have true and fair view. What is the pervasive effect? The pervasive effect simply means that you are saying they are not all confined elements. Everything in the FS is not aligning together. Abi, they are not all confined elements in the FS, but this represents a substantial portion of the FS. Or in relation to the disclosures in the FS, in relation to disclosures in the FS, they are fundamental. See, my brother and sister, all this one's plenty English. You understand, I shall know the meaning of material and pervasive, okay? So now, they mean that this disagreement that we have in management, or what we call material misstatements, Abi, it can be material but not pervasive, or it can be material and pervasive. Okay? Now, when we have a disagreement with management that is material but it is not pervasive, the opinion we'll give is a qualified opinion. They call it except for. Okay? Except for. So they will say except for, Abi, except for the application of IS2 that we do not agree on. Abi, this financial statement gives a true and fair view. So you can see what qualified our opinion now is that except for that they put inside. Okay? So a qualified opinion is also called except for. Now, when there is also a limitation in scope, let's say there's a limitation in scope, and limitation in scope is that you are trying to confirm their bank balance. They told you that they have 15 million in one bank. You're trying to confirm that bank balance, until the end of the audit, you did not see the bank balance to confirm. Okay? And it is material to the total value of their current assets or their assets in general. You understand? You know there's a limitation in scope. Is it not a limitation in scope? I need answers. Is it not a limitation in scope? It is.
Can you just state again briefly? So sorry.
Please listen. I'm using all my energy to explain this. Now, I said, let's say you are doing an audit, Abi, and you are trying to confirm a bank balance. That bank balance is 50 million. You're not trying to do bank confirmation. You know how to do bank confirmation. You send a mail to the bank that my client has said that their bank balance with you is 50 million. Confirm this figure. They're not trying to do it, and the client cannot confirm to you that, Abi, the bank cannot confirm to you that it's actually 50 million, and you were pushing throughout the audit to the end of the audit. And that 50 million is material to the total assets of that company. Okay? But it does not mean that they don't have money in other banks, so they have money. You know that's a limitation in scope. Limitation in scope does mean that when you cannot generate enough audit evidence to support a claim. Are you with me?
Yes.
So now that's the limitation in scope. It is material, but is it pervasive? Let's say the company's value is about 1 billion. Or let's say the company's value is about 1 billion. Is 50 million as pervasive for them? Is less than 0.05. Okay? So it is material, but it is not pervasive. So if disagreement with management is material, but it's not pervasive, and if limitation in scope is material, but it's not pervasive, you will give them a qualified opinion, where you say, except for the bank balance kinikon that we're not able to confirm. Abi, this financial statement gives a true and fair view. Do you get?
Yes, man. 100%.
Now, when there's a disagreement with management and it is very material, and I tell the management that I said your application of IS2 is wrong, sir. You cannot do this. This inventory will not have this value, blah, blah, blah. Management writes back to you and say, it's not you that will tell us what we'll do. Abi, you are now going back and forth, back and forth, back and forth. You just leave them. Abi, where you have power is in your opinion paragraph. You will give an adverse opinion. Where you will say, I don't know where management got their figure from. Abi, let me read it. How did they explain this? Let me see. They didn't really explain it. Okay. So, where you will say that, in this case, Abi, we cannot rely on anything that these people give us, so because we keep telling them, Abi, you give an adverse opinion that I don't know how these people got their FS because this particular standard has not been correctly applied. That's an adverse opinion. That is an adverse opinion. When you state that the disagreements you're having with management does not make you to be able to confirm the truth and the fairness of these financial statements. Are you with me? Now, when limitation in scope is now material and pervasive, you get there. The first 6 months FS, you do not find it. They're not telling you that you should give opinion on that FS. Which FS do you want to give opinion on, Gong? Are you with me? You don't have enough information. You will now give a disclaimer opinion. Okay? You will give what they call the opinion, a disclaimer opinion. Now, what are the things that lead to limitation in scope? Number one. So you understand this table now?
Yes, to a good extent. At least for me. I don't know about that.
Oh yeah, break it down for me. Break it down for me. Or somebody else. Is it the only one in class? Somebody else can do this. Who is using iPhone? Who is CG? Angela, have I heard your voice at all in this class?
Yes, you heard my voice earlier.
So, do you understand this table?
Yes, to a reasonable extent I do.
Oh yeah, break it down for us. I'm telling you, all this reports chapter is one of the most stressful chapters to people in your AAA. You will see people struggling to know it. And I always tell them that the reason why they struggle to know it is because they are cramming. It's because they are cramming. Simply put, a report can either be what? Modified, or a report can either be unmodified or modified. Abi, if an unmodified report has, the reason why it is called unmodified is because the opinion paragraph inside it is what? Unmodified, right? Then there's a modified report. The reason why the report is modified is that there are matters there that either affects the auditor's opinion or does not affect the auditor's opinion. Matters that does not affect the auditor's opinion leads to an additional paragraph to your basic element of an audit report, which makes you add an emphasis of matter paragraph or an other matter paragraph. Emphasis of matter paragraph, you are referencing something on the face value of the FS. Other matter paragraph, you are referencing something that is not on the face value of the FS. Okay? Now, we now go to the other type, matters that affect the auditor's opinion. Here, the audit report is modified because the audit opinion inside that audit report has also been modified. There are now two matters there as well. Either there's a disagreement with management or material misstatements, or number two, there's a limitation in scope. If there's a disagreement with management or a material misstatement, or there is a limitation of scope that is material but not pervasive, we will give them qualified opinion. That is called except for XYZ. This financial statement is true or unfair. Okay? Now, we now have adverse opinion. If the disagreement with management is what? Is material and pervasive. Okay? They call it adverse opinion. Now, if the limitation in scope is material and pervasive, you will give them what we call what? A disclaimer of opinion. That's all. That is all. That is all in audit reports. Okay? Do I have a class?
Yes.
Okay. Now, let's look at something. What are the things that lead to limitation in scope? Number one, circumstances beyond the control of the entity where such an entity records have been destroyed. You know, as example I was using for you, Abby, where a client's records have been what? Have been destroyed. Number two, circumstances relating to the nature or timing of the audit work. An example is where the auditor is appointed too late to enable him to attend to a physical inventory count. Okay? Number three, limitation imposed by management. The management of an entity may prevent the auditor from obtaining audit evidence that is required. You see why the opinion they have to give is disclaimer. You understand? Because management want to bring auditor into their mago. An auditor has his name to protect. Next one, preventing the auditor from observing physical inventory counts. Oh yeah, let's go to this store and the key is not here. Oh yeah, and that's the way you did till the audit ended. Next one, we have preventing the auditor from asking for confirmation for specific account balances. So let's look at audit reports and the exam. For the exam, you may be expected to study an audit report that contains errors and identifies what those errors are. Alternatively, you may be asked to discuss what audit opinion will be appropriate for such situation. This is where people used to fight. Because somebody does not even know the kind of things that lead to emphasis of matter paragraph. And that is, and they want to give them an unmodified report. Is this correct? Oh yeah, somebody should answer me. They give a question, they say there's a pending litigation, Abi, and the entity is not sure of the future outcome. But the audit firm wants to give them an unmodified report. Is this a correct opinion? Is this a correct report? Is it a correct report?
No.
Correct? No. We are supposed to say no and say the reason why it's no. So why is it no?
That matter of litigation should be included as other matters in the other matters paragraph.
Okay. So a litigation should be included in an emphasis of what? In an emphasis of matter paragraph. They can tell you that an entity adopted a new IFRS, Abi, and blah blah blah, and they want to give them an adverse opinion. It is you that will come and say no, an adverse opinion is not correct. Abi, the entity is supposed to receive a modified report with an unmodified report, and a modified report with an unmodified opinion carrying what kind of paragraph? Emphasis of matter paragraph. But how will you know what the correct thing is if you don't even know what falls under those paragraphs? Do you guess where the complexity is?
Yeah.
Exactly. So this is where people used to face issue. But I've taught this over and over again, and I've come to a conclusion that the best way to teach students is through that table. Let them first know the table, okay? Let them first know the table. First know that there are two types of reports, and the opinion paragraph is what is the major thing. The opinion paragraph in an unmodified report is unmodified as well. They call it clean reports, okay? Some people even call it unqualified reports. You know it's still correct. Do you know it's still correct? An unmodified report is an unqualified report. Do you know it's still correct? Hey, do I have a class?
That's fine.
Yeah.
Just found out. No,
Eh?
I didn't know. I didn't know.
You didn't know. Oh, why? No, now, because why do you qualify a report? It's because it's an except for, right?
Yeah.
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 So if there's no except for, we can call an unmodified report an unqualified report.
Correct.
There's nothing to accept there. Are you with me? Some people even call adverse opinion. I'm sure you'll have seen all these things. Some people even call let's diagram. People call adverse opinion. They call it subject to. You'll have seen subject to somewhere. So you know the way we said qualified opinion is also called except for, Abi? They call adverse opinion subject to. So they will say subject to the disagreement with management, Abi, these financial statements, and they continue like that. So where the work is in your reading, in your studying, is that you are supposed to know the things that fall, the matters that fall under each one. You are supposed to now take this and say, what are the matters that fall under emphasis of matter, right? These three, and you hold on to it well. Court case, new IFRS, Abi?
Yeah.
Court case, new IFRS, court case, new IFRS, and a major catastrophe. Can you hear me? Did you lose me for a bit?
For
I
a
know
few
you.
seconds. Okay.
Okay. Okay, so I'm trying to help you now. Emphasis of matter, there's exceptional litigation, Abi, new IFRS, and major catastrophe. Okay? Other matter paragraph, either there is a subsequent event or there are problems with their going concern. So there's a problem with going concern is going to other matter paragraph, meaning that the audit report is modified, but the opinion paragraph in that audit report is not modified. Do you get what I'm saying? You can see how they said it. Without qualifying our opinion, we draw the attention to note X on the financial statements. That is an emphasis of matter paragraph. But for other matter paragraph, you will not be able to reference it to any matter on the FS. Okay? Now let's go back to this place that they said audit report and audit exam. Abi, for the exam, you will be expected to study an audit report that contains errors and identify and explain what those errors are. Alternatively, you may be asked to discuss what audit opinion would be appropriate in a particular situation. To the key issues to consider as follows. Number one, do the financial statement gives a true and fair view? Remember, misstatements do not affect true and fair view. They are immaterial. Number two, if they do, the audit opinion will be modified. If they do, okay, that's wrong. Okay, do the financial statement give a true and fair view? If it gives a true and fair view, it will be unmodified, Abi. If the draft FS gives a true and fair view, is there any item that justifies an emphasis of matter paragraph? Usually, an emphasis of matter paragraph is something that affects the going concern, or emphasis of matter paragraph is something that's already on the face value of the what? FS. Okay? If the financial does not give a true and fair view, what is the item in contention? Is it something that involves a disagreement with management? That's the disagreement. Or is there inadequate audit evidence? That is the scope. Is this material but not pervasive? If so, qualified opinion, Abi, that is called except for. If the matter is material and pervasive, it is either an adverse opinion or disclaimer opinion is appropriate. These are rare in practice, but of course they could feature in exam. Because how do you pay somebody 50 million? Are you guys with me? How do you pay somebody 50 million for the person to come and issue you a disclaimer of opinion? Will your company agree to that? Will your company agree to that?
Yeah.
So trust me, even the worst of them all, maybe something like other matter paragraph, even emphasis of matter paragraph said they no go agree. Do you understand? So quite interesting. So let's look at some examples, okay? You are the manager in charge. Don't worry, we'll be out of here sooner than you expect. I like to leave students early. I come to class early. I like to leave the class early. Okay? But of course, we'll take your questions, anything that you have. So let's look at the example. How many examples do we have? Maybe give us like a full one. Okay. So let's look at it. Okay. You are the manager in charge of an audit of Coloros, a limited liability company. Your audit reports for the previous financial year to 31st December, year 7 was signed without modification in February, year 8. The scope of the audit audit year to 31st December has been limited. This is because the company's CFO fled the country in April, year 8, taking accounting records with him. You have identified a valuable training opportunity for Robin, one of your audit team, as a trainee exercise. As a training exercise, you have asked Robin to draft the extract of the base of opinion, an opinion paragraph that would not be a standard wording in an unmodified audit report. Robin's draft extracts were produced as follows: basis of opinion. However, the evidence available to us was limited because accounting record was missing at the beginning of the year. It was impossible to reconstruct them completely. His opinion was, because of the possible effect of limitation in scope available to us, we do not intend to express an opinion on the financial statement. Can you see the way they put limitation disclaimer? Because of the possible limitations in the information available to us, we do not express an opinion on the FS requirements. Identify and comment on the principal matters relevant for forming an opinion on the financial statements of Coloros in year 8. Then discuss the suitability of Robin's extracts. So let's look at the answer. They said identify the principal matter, comment on these matters, identify Robin's reports, indicating they've been identified, reach a conclusion about audit reports. Basically, what they're trying to tell you is that identify the matter gone that is making Robin not be able to express an opinion. And that's the limitation in scope. Abi, if you get to exam, you don't have to write this way. What the examiner wants to see is that you have a proper understanding of what you are saying, okay? So you can say that the Robin situation in this case, the principal matter here, there's not even need to begin by principal matter. The principal matter here is that somebody has run away with company record, and you want Robin to now give an opinion on record that he cannot see, okay? Now, discuss the suitability, okay, relevant matters. So let's look at it. The accounting record for the first 3 or 4 months are missing. The accounting record are missing because the CEO absconded with them. You see what I was saying? There must be reasons why he took it. That means there's a fraud where we can smell a fraud, we can perceive a fraud. Next thing, the audit opinion for the previous year was unmodified. This could reflect that the opening balances for the current year and the comparative figures are correct. However, this cannot also be the case. So when we do evaluation and review, we talk about auditing opening balances as well. Yes, you're not the one that brought these balances, but you cannot just rely on balances that were given to you hook, line, sinker. Okay? It does not work like that. You cannot just rely on balances that were given to you hook, line, sinker. So that means that he's saying that, yes, just 3 months are missing, but I cannot just take the information that you have now given me and work with only that one. Number 4, if there's a possibility of fraud, it could raise that about the correctness of the whole audit reports, even for previous year. Right? Why is your CFO running away? Why is he running away with company records if last year you got an unmodified report? Do you understand? So you see that all this thing that are doing here is basically professional skepticism. It's a questioning mind. Like we said, there's an inability to obtain sufficient and appropriate audit evidence, limitation in scope for December. So you may not write your own in this exact way, but there is a major thing. You must be able to identify the matter. what is the matter in this case? There's a limitation in scope. So conclusion, Robin is correct in his modification of the opinion on the grounds of limitation in scope. However, the draft should, number one, make reference to the exact nature of the problem. Number two, take account the possible modification in relation to comparative figures. Then number three, take account of the fact that the problem may be limited to the statement of income because it happened in just the first 3 months. Okay? Now, I will tell you, you cannot audit report questions are not exhaustive. You understand? It's not like what is ethics, or it's not like what is IAS 24. Every diet can have a different style, you understand, of the audit reports. It is non-exhaustive. And I always tell people, the only time it is wrong for you to read a question and read the answer is when you're in the exam board. Up until then, open the audit report. Abi, you already know the answers. Look at the pathfinder, look at the diets where audit report was asked. Read all the question and read all the answer. Nobody is going to beat you. Are you with me? Do I still have a class?
Yes.
Okay. So, okay, somebody asked a question. So there's a bit of difference between the audit report. The audit opinion is inside the audit report. You get that now, Abi?
Yes.
So nobody will beat you. Open the question, open the, especially this one that in case study format. You understand? Open the question, open the answer. You now see that, okay, what happened here is going concern. That's why it's an other matter paragraph. Oh, what happened here is pending litigation. That's why it's emphasis of matter paragraph. You get, the more you familiarize yourself with the style of questions, the better prepared you are for your own. Are you with me? So don't live here now and do James Bond, Christiana has taught me. I must not be able to. You understand? These are case study questions. And that is how you are supposed to approach them. You read through them. Then you yourself, you sit down and start imagining different circumstances that can happen. Okay? Okay?
Yes.
So lastly, I promise to leave you guys early. So lastly, specialized area. ISAs in the 100s to 700s series applied to an audit of financial statements. ISA 800 deals with the special consideration in the application of those IAS to an audit of financial statement prepared in accordance with special purpose. The special purpose framework could be a fair representation or a compliance framework. If the special purpose financial statement have been prepared in accordance with the provision of the contract, then ISA 800 requires him to obtain an understanding of any significant interpretation of the contracts. See, what they're just trying to say is that sometimes somebody may ask for a deviation, somebody may ask for a different style. Abi? Somebody may ask for a different style of an audit report. When that happens, we record it under ISA 800, okay? But you must confirm from the client that why are you pushing for this style of what? Of reports, okay? Okay?
Yes.
Okay, so ladies and gentlemen, that's all. That's audit reports. Straight and forward. Do you have any questions for me? Do you have any questions for me?
None at the moment.
What did you say?
I said, for me, I don't think I have any questions. That's what I'm saying.
Okay. Okay, other people in class, do you have any questions? Or should I ask my own questions? Me, I have plenty of questions.
Hi, please can you give us, like, state an example of a disclaimer of opinion and adverse opinion?
Okay. Okay. Adverse opinion, right? There's a disagreement with management on an application. Okay. IFRS IFRS 40, abi, or yes, 40 investment property, abi, states that income that is gotten from investment property should be treated as other comprehensive income, abi, added under the total income in your income statement. Are you with me? Now, you have gone to audit a client. The client has put interest on investment income in where they used to put interest on investments, like as if it's normal investments. Okay. And you know, the reason why you're putting it in OCI under IAS 40 is the fact that you have not sold it. You are still holding that investment. So if you are still holding that investment, it has not translated to income for you. And that is why it is in OCI. I'm basically doing CR now. Okay? Now, your client now told you that, no, we want to put that income in our own PO. We want to put it in our income statement. There's nothing you can tell us. There's nothing you can do about it. And you keep on showing them this standard is not correct. The way you are applying it is not correct. And they said, no, these are they want to do their own. In that case, you don't even follow them and argue. If it is material and pervasive enough, you understand? You know, if it's only material and it is not pervasive, you give them qualified opinion. That's except for. If it is material and pervasive enough, you will give them an adverse opinion. Okay? Like I said, they used to call it subject to this. This financial statement is true and fair. Okay? If you want to know the exact way they write it, go to your pack. Go to audit reports. They have examples for all the type of reports and their opinions. It is in that pack. All the type of opinion and the way they will type it, the standard wording. Because apart from a modified report, be an unmodified report that has standard wording, even a modified report too, it kind of has a standard word. Like they will tell you the exact way to write it. You understand? So all these examples, they are all there in your pack. You can just go there and read it. Read how they write adverse opinion. Read how they write disclaimer of opinion. Okay? I know that you guys are lazy. So when we drop off this call, I will go there, I'll screenshot it, and I'll send it to the group. Is that okay?
That's fine. Thank you.